Welcome back to Business Week here on Arise News. I'm joined now by Oladele, founder of the Money Wit Club, to review some of our top stories in more detail. Good morning and welcome to the show, Ola. Great to see you. So the first story here is Netflix. In my head, I'm thinking, why did Ola choose this story? But actually, it's interesting because I'm wondering whether Netflix now going into gaming, is it trying to future-proof itself and become a sort of all-in-one entertainment hub? Is there something about the streaming business that's not going to be sustainable?
So the streaming business is highly competitive, fundamentally. And if you look at Netflix numbers, I think they just broke into a profit like a year or two ago, even though they've been in existence for a long while. So the streaming business is highly competitive. If you even look at them pulling out of Nigeria, technically not buying a lot of movies like they used to, it just shows the level of competition in that space. But what are they trying to do here? Number one, the gaming industry is massive and it's expected to keep growing. So what they are doing is that they are trying to create an ecosystem where people are on their platform long enough so they can go into ads. So the game is actually ads, but for you to be able to sell your ads and for people to come and advertise on your platform, then they need as many people to be there long enough. So the idea is that they are trying to catch your attention as a Netflix person or a Netflix family, right, with the gaming platforms that they are onboarding, but they want to be able to sell ads fundamentally, and it's going to reflect in their stock prices eventually. So they are changing their business model.
Essentially, that's interesting. So we're likely to see other streaming services also pivot in this direction.
Possibly. If you consider, for example, Amazon is somewhat has a moat around itself because there's an ecosystem of subscriptions and all that. But and then they also have gaming subsidiaries. So it's not so hard for them to implement, right? But Netflix has always been standalone, trying to break into the big boy space. So I see this as them spreading their tentacles in places that could possibly work for them.
Interesting. We'll be watching that one very closely. Now, gold surging to $4,000 per ounce high. I mean, it's incredible, the rally we've seen over the weeks and months. So my question is this more about fear than fundamentals? Because people see a safe haven as a safe haven, so they're running away from something. So the question is, how sustainable is this continued rally?
So I think it's sustainable. It's either it will stay as is or keep going higher. As against, will it correct and go down to 2K? Why? Because if you are buying to hold, nobody really buys gold to get returns of it. You are buying to store technically under your pillow, right? So if that's the case, then it must be a need that will make you bring it out to sell, which is different from the highs and lows of oil or of stocks, you know. So I think it's here to stay. It will either slow down the pace of increase or keep going, but it's here to stay.
It's interesting because we tend to see these rallies suddenly spike shortly after a Fed announcement. So how much of this we're saying is tied to US monetary policy, and particularly what happens with the dollar, especially because we're seeing rates come down?
Exactly. Gold is traded in USD.
So
if you are holding USD and you're not happy with USD, gold is an option for you. So every time there's uncertainty or it's not as attractive to hold dollar, people fly to gold. And so as long as that keeps happening, which we think will continue to happen with this current leadership, so give it a year or two before it calms down, then I think that gold is still the place to be.
Assuming we see a turn in Fed policy decision, then we might see a change in the trajectory for gold.
What does the turn look like? Raising rates?
Well, not raising. I don't think we'll see a rate rise. I think we're sort of in a sort of.
Let's leave it as it is. Yes. Right. So in terms of expectations on the monetary policy side in America, I think we are sort of in a certain direction, and so that direction is a positive for gold. And then when you think about the president and his posture, it's also a positive for gold.
Yeah, interesting. So the U.S. government shutdown, it's an interesting connection between the government shutdown and specifically real estate sales. You know, tell us a bit about the correlation here.
So government agencies are in buildings. The longer this shutdown continues, then you question, why is this lease contract still running?
So specifically we're talking commercial property.
Commercial property. So why is this lease contract still in existence? Now, in also that space where there are those government agencies, they are supporting businesses. There are some things that are running because there's that attraction. If nobody's coming to work and it's continues for a period, then you start realizing that, okay, I don't need to pay this rent because nobody's coming to buy, and it becomes a ripple effect. So whilst the government shutdown directly impacts government agencies, there's that ripple effect in commercial businesses, in contracts, and even things like I'm doing a development and I'm waiting for a permit. Every day that my permit is supposed to come out and is not out, it's suspending my project.
Sure.
So it has financial impact.
Indeed, it must do. And I guess if one were to look at the numbers, that means the sort of proportion of commercial real estate in key urban areas that are occupied by federal agencies must be pretty high for this to have a significant impact on the market. Of course, there are more broader implications of the U.S. government shutdown. You know, what are you saying that this government shutdown is likely to mean for the U.S. economy more broadly?
Consumption.
Right.
It will slow down consumption. It would increase credit, because people would turn to their credit cards to the extent that they can. And then at some point, if it goes on for long, it will increase defaults. So it's not good for the economy. They really need to fix it as quickly as possible.
Interesting time. So we come to a big issue in Nigeria. The capital gains tax. The plan is to move from 10% to 30%. Now, part of the rationale here, obviously, is broadening the tax base, bringing CGT more in line with OECD levels. But given that it feels to many of us that the market is only just rebounding, such a move could really undermine investor confidence. So my question is, why not let the market rebound, sustain that momentum, and then look at maybe introducing a tax like this and maybe even phase that increase over time? You know, what is the rationale here? Help us understand.
So first of all, is income generation, one.
Yeah.
Second is the fact that between the pandemic and now, we know that the foreign investors in our equity market specifically has significantly dwindled. To a very large extent, currently, the pension funds are the major drivers of the stock market in Nigeria. So in my understanding, they are raising it at a time when, if you want to come in, know that this is what's going to happen. This is how it is going to be. That's one. On the other hand, also, you would also realize that one of the things that we struggled with is hot money. One of the terms they put in is that if you exit but you go into another asset, you don't pay the capital gains tax.
Right.
What they are trying to do is to make hot money cold.
Yeah, and make it stay.
Yes.
Okay.
So from that angle, it's not so bad. But the thing is, I mean, if you look at, we're comparing from 10 to 30. But if you look at other climes, we're probably comparing a 10% difference. So average, you see 17, 20%, right? So it's a 10% difference. Our goal and our game should be that our companies are so attractive and the expected growth will be so much that I would still want to come in despite that 10% difference, right? Because I see a lot of value. Once you have that, then they most likely will come, and then if they leave quickly, they'll pay the taxes. If they stay longer, FX is stable.
Yeah.
So it's not so bad.
Yeah, I get you. But you know, one of the things I found in Nigeria, with something like this, sometimes it's not so much about the rate itself, but around the paperwork and the clarity of enforcement and what needs to be done. And do you think generally foreign investors may be concerned around the absolute level of the rate or all the other mechanisms around administering this sort of tax, what it means, how to go about the paperwork in a system like Nigeria?
To be honest, the stock market is very clear because stockbrokers generally, even if you bought a stock 10 years ago, go on the platform, you see the price you bought it at. So to be able to calculate your capital gains will be very clear. The only place I see an issue is that if you move to another asset, how is that filing going to be done?
Right.
But then they're creating a system. They're going digital, right? But we have to wait and see because there's a lot of pressure on that platform, right? If they go digital and execute well, then it might be seamless, but we'll just have to wait and see.
Okay, so just one more thing. So the market is up about 40% year to date. And I would argue that a large part of that is domestic participation. But generally, we know that foreign flows have been key for liquidity, price discovery. So if this goes ahead, what is the trajectory and outlook for the market? Are you going to see a major outflow, a downturn in the market, or do you think there is enough domestic demand to shore up any inadvertent negative effects brought about by the imposition of this capital gains tax?
So generally for offshore investors, traders, they would go out around October towards the end of the year because they have to bank their profits and convert to USD. So I honestly feel like the fact that it starts in a new year gives everybody room to think well before they come in, especially if you're a trader. They would have exited anyways, and then in our current market, they are not as significant, and a lot of people are hoping for a correction so they can enter.
Right.
So there's also that. So I think that the impact may not be as strong because there's also that expectation that there will be a correction.
So, everything that happens in Nigeria from a policy perspective always first goes to the course of public opinion. What are even the chances of a revision or a backtracking on the government side on this? What do you think?
Between now and January, it's been signed into law. That would be tough.
That would be tough.
Very tough.
I just thought I would try my luck.
Very tough.
We've run out of time, Oladele. Great to speak to you. Thanks for joining the show.
Thank you for having me.
Thank you.